Good afternoon, traders. This is Christian from Tribeca Trade Group, and this is your end of day market recap as well as end of week for Friday, November 18th. One more week to go in terms of going through the week of Thanksgiving. Reminder that Thursday is off for Thanksgiving and Friday is a half day. We'll also be doing a Tribeca Trade Group trader meetup on Tuesday. That's something that we're going to be doing a little bit more regularly, but I think next week will just be kind of for fun. But I think we'll be doing more, kind of chart reviews in person, and going through and listening to different traders kind of talk about what they're seeing in the market, and what their risk preference is, and so on and so forth. So I'm looking forward to more of those. I think even 2023 will really be something that we'll be doing more of those. So let's get to well, before we get to today's price action, speaking of being a Tribeca Trade Group member, you can get involved right here. I tweeted this out yesterday. I think we still have this available for today, and I'll have to check to see if we are going to do this for the rest of the weekend. But it's basically new member end of the year special. It's a great opportunity to check out Tribeca Trade Group for the last bit of 2022 and get a feel for what we're doing. I can tell you right off the bat, if you like to be ahead of the trend, we're very good at spotting where there's strength in this market. We typically do that all the time. It's one of my one part of the trading edge that I use is being able to spot trends very quickly and then capitalizing on them, and then of course using our indicator. That's also a good portion of the edge that we have in our trading. So go ahead. I tweeted this out yesterday. You'll find this yesterday afternoon, the link, as well as the coupon code, 25% off for the last 2 months of the year. So let's get to the price action for the day. Well, monthly option expiration always, to me, is a bit of a tricky day. I trade less on these days. I mean, they're nice for, if you want to do a couple lottos and that type of thing. Nowadays, everybody's doing lottos with the explosion of this 0 days to expiration options, where you basically have options that expire every day. That's pretty crazy to me. If you're really good at that type of thing, so be it. But a lot of times they're called lottos for a reason, right? Sometimes if you can manage to make a great call, you can see a nice move. We did that with a couple of trades. Yesterday we played GM lottos for their analyst day, and I actually put on some Procter, small positions, again lotto, right? Meaning not a big play, but I put on Procter and Gamble calls too that were, I think, around 38 cents or something like that. 33 cents, and got out of those for 90 cents today too. Both GM and Procter and Gamble had their analyst days. Always, you could, that's one nice thing that is a nice use for short-term options, is that you could play something like that in analyst day, and if they say something positive, something unexpected, usually the stock moves with that, and you can make some money very quickly. And weekly options are great for that type of catalyst type trade. But in any event, monthly option expiration, I trade less on these days because sometimes it's a bit of whipsaw move. Sometimes they're not exact. It's not always a logical move that you see for today, on monthly options expiration. So it is what it is. Let me get to the price action. With that being said, the Qs underperform. It's just funny that the way that this market has been this year, it has not, speaking of trends, this is an unusual year. This has not been a year for a lot of trend trading, especially when, after we got through the first couple months of 2022, really the last few months, it's been, a couple days of a move this way, a couple of days of a move that way. But overall, when you look at this market, and basically going back to a few months ago, this is what we've been dealing with, right? And even like going all the way back to basically, where we were in May, we haven't gone anywhere. Certainly we've explored lower, we've explored higher, lower again, but overall this market has kind of been going sideways for the last few months, and there's a little bit of a tilt to it depending on what month you're looking at, but that's the story. This year has not really been about major trends, or at least the second half of the year. So of course that will eventually change, but for now that's kind of what we're dealing with. And so to finish what I was saying is, yesterday the Qs outperformed, today they underperformed. They were down 1% for the day. They finished flat for the day. SPY, right in the middle of the Qs and IWM, they finished positive for the day, up about 0.5%. And small caps outperformed, although they were not up as much as they were earlier in the day. They gave back about 0.5%. Bonds were down for the day, and the dollar, I think, was just up about almost 30 basis points. So you had rates higher and you had the dollar stronger, although not really big magnitude. But in any event, I think that weighed on markets just a little bit. Interesting, the VIX, sometimes this happens on Friday. Every time I tweet something about the VIX, being different than what the S&P did, somebody always gets mad at me. There's very passionate people, VIX people on FinTwit. Just something in case you haven't seen that before. Be careful tweeting about the VIX. People come out of the woodwork and tell you that you're wrong no matter what you say. So just kind of interesting. Today, besides retail, retail had some very interesting moves. This was a big week for retail earnings. I always talk about this because I'm not an expert in retail. I don't do a lot of shopping. So I don't play that much in that area, but it seemed like for every company that went up, the Walmart, there was, for example, earlier in the week, there was a name that went down, Target. Ross Stores went up, TJ Maxx went up, Williams-Sonoma went down. So you really have to know that group pretty well. But there was definitely some winners within retail. It certainly wasn't all bad, despite hearing that the consumer is not doing great. We continue to see certain areas of retail continue to be very strong. I'll go over a couple of those charts in just a minute. Let me just get through the sector performance. So besides retail, it was very much a defensive type of move. Utilities were up 2% today. Very strong. There's plenty of things to trade in utilities. I know people don't like to do that, right? I still think that there's people that are still stuck in trying to trade, growth names of the last couple of years. But I'll tell you, this is a more diverse type of market. We're not just seeing one group, make all the performance. Clearly it was energy for a while. I'm going to go over the crude chart in just a minute, because that looked like it was breaking down in the beginning of the day. However, it recovered a bit. So, energy is definitely the story of this year, and that has been the trend. But other than that, it's been things like, from time to time, healthcare, utilities, right? We have seen a little bit of different other areas participating, Chinese internets, biotech, and so on and so forth, financials, industrials as well, recently. So let's get into the price action. And by the way, the underperformers, software gave back a lot of the gains. Palo Alto had good earnings, but that gave some pin action to some of the other names. But a lot of those names gave back the early gains. It just has not been a year. Like, for example, I'll start with this stock. But Datadog, which was down 3%, right? I've talked about this name a couple of times because I'm saying this name is higher valuation, even though they had decent earnings. They still, got rejected at the 50-day moving average, right? And are hanging below in a downtrend. So it'll be interesting to watch these names to maybe if they can, at some point go a little bit more sideways and then maybe turn back up. But for now, they're still, under pressure, right? They've bounced like they did, like everything did last week, but giving a lot of that bounce back at this point, right? Just a proxy. All right, so let's talk indices for a minute. All right, so S&P, so first of all, again, I said this yesterday, I'll say it again. We really didn't go anywhere for the week. We were down about 0.5% for the week, S&P. A lot of digestion after Thursday and Friday's move. I think that's quite normal. One of the things that's interesting here is just by a hair, we held on to the 5-period moving average. Again, the moving average has really kind of helped me see the short-term trends, especially when we're outside of the value area like we are right now. Okay, so basically a very sideways week. We did go back and forth all week long. Talking about trends. This has been, for the better part of this year, this has been more of a scalper's market in things like the indices. If you're looking for breakouts, they've been very, it's not to say that there hasn't been breakouts, there have been breakouts, but not nearly as many as what you see in a bull market, right? You see a lot of this price action. We start to turn higher and then we just flip the other way. So if you've been selling the rip and buying the dip a little bit, that has worked more than anything else, especially when you have a week like this where you just go sideways. But again, it's not every week. We're just seeing that a lot, right? That's the price action for this week using the 1-hour chart. We did stay above the value area for the week. So again, still below the 200-day moving average. Let's see if this little consolidation, the fact that we kind of held in here and didn't break down leads me to believe that we have a chance to kind of resolve higher out of this consolidation, right? Out of that move from last week, but we'll see. Here's what NASDAQ looks like. Again, very methodical. We hit this VPOC, which we talked about earlier in the week. We did come back and test support and we held support. So we're kind of in the middle of this version point of control as well as the top of value. I think this is the hardest chart right now. IWM, also not exactly easy. A lot of back and forth, back above the 200-day moving average, below the 200-day moving average, back above the 200-day moving average. So almost back to it today, didn't quite get there. You could see, for example, where we found resistance, which was right at the top of value for the week. Just IWM was not ready to kind of make that turn. Here was your resistance, and we stopped right at a dime. I mentioned I was going to go over crude. So here's what the crude chart looks like. Right, so we kind of have a hammer bar. We did break the value area, but for now we've put in a little bit of a higher low from where the low point was back in September. And also take a look, turned right on a dime on that 1-hour VPOC takeout. And I put this chart out on Twitter earlier saying this is a potential area that we could reverse from. So we'll see. Now, it doesn't mean a V reversal. It just means like, hey, we're going down here, probably taking it out, and we might see some digestion after that. All right. So notice where that is. Again, if you don't have these on your screen, you're probably thinking, oh, we're probably going to come down here. Nope. Here's where the volume happened from this consolidation, from this volume profile. All right. And what I would watch for next week, I do think that the energy trade, will hinge a little bit on what crude is doing. And I would be looking for crude to get back above 83.27. That's about $3 from where we are. But first things first, hammer bar on a down move. All right, so I found that pretty interesting. We'll also just talk about Bitcoin. I was toying around with going short Bitcoin for the weekend. I didn't do it, but maybe I should have put this on because this isn't that strong of a bounce here. And notice we talked about the 5-period moving average with we talked about the 5-period moving average with the S&P. This went below and hasn't been able to get above. So it'll be an interesting week. It always seems like an interesting weekend for crypto. That's the story there. I wanted to go through a couple charts with you guys where I found some momentum. We had a couple setups that we were looking at going in today. I actually shared a whole watch list with traders today, but I thought this was interesting. So what's not bad when you have a little bit of a pullback is things like this. As I mentioned earlier, this has not been a year to chase breakouts for the majority of stocks. Again, there are exceptions, but names coming back up, names coming back into their support have been much better setups, right? So this is I believe it's a communication company's Harmonic. Remember, this had a huge move, ran too much into earnings, fell down a little bit, down to 13, but kind of held this 50-day moving average quite nicely. Real big rally day for this, up 7%. and went to 1468, which is where I thought it could get to for a short-term trade. I did not trade this one. I traded the name that I traded today was MODN, which is another software play. I was able to hit a target. Very neat, right? Gap up on earnings, digestion back in here, coming in back into the 20-day moving average, and nice little pop. A few traders traded the CALX. This is another one that's required some patience. Right, this is the first time. Remember, this had a nice gap up on earnings, a little bit of follow through, took out the VPOC, kind of stalled there after a few days, came back into the bottom of value, tested the 50, and then kind of started and stopped a little bit yesterday. Didn't look that healthy, went back below, and then nice gap up today. So maybe this can have some continuation after that move. Sometimes these names like to shake traders out. Notice that it did reach, got above the value area. I view that as a positive sign, and I would be looking for this name to get up to 73.58. That's a version point of control from back into this volume profile. A few other, I'm going to go through some of these names pretty quickly. So we went over that. STNG, which we may have went over in yesterday's video. I don't know. That was the name that we were looking at towards the end of the day. Real nice move up 3.6%. Had a nice bullish engulfing candle yesterday. Really nice in that one. Then, of course, looking at some of these, I mentioned today was a more defensive type rally. Nice move here in Amgen. Another one that I had my eye on today was AbbVie. Right, these healthcare names continue to be stronger on a bit of weaker days that we're seeing. Bringing a little bit of biotech here. This NBIX, also another name. You had to wait, be patient for a dip in here. Right, 112, really nice move on that and moving back higher. Going back to retail a minute, Deckers. I mean, look at that candle for the day. Right, into this consolidation, gapped up. And nice move. I didn't even see if there's any news on it. It's okay, but handled a kind of little bit of a weak earnings move, but has been consolidating quite nicely, and now may be ready for that next leg higher. Ultimately 404 up here, 420. Let's see if there's anything on the 1 hour chart. Again, I use multiple time frame analysis, but yeah, I don't see anything up here too. So if it wants to go, I don't want to see these red lines, at all, basically, once I'm in a trade, but at least this one's far up. But keep in mind, we're dealing with a lot of overhead supply in a lot of names. Another one too, again, some of these are just kind of one-offs, but NRDS, this is also a name that had strong earnings, making a nice little move in here. All right, guys, so that's it for just a couple charts review. Here was the week in review in terms of performance. Notice just about everything in terms of the indices were red. The Dow outperformed, only down 1/10 of a percentage point. International actually did okay this week too. Bonds were up 1.8%. They had some follow through, even though that they were down today. Gold was down 1.1%. The dollar was up just a little bit, and value outperformed growth a touch. Chinese internets were your best performer. Solar, a very strong group this week as well. Again, a little bit of risk on there. Other than that, consumer staples, utilities, aerospace and defense, those areas outperformed. FANG stocks, gave back some of those gains, down 4%. The builders too. Surprisingly, the banks, which did okay today, were down 3.3% for the week, and that's the same with the regional banks. And the gold miners, which outperformed a little bit today, also down. All right, and here's your international performers. So that's it, guys. I just wanted to wish everybody a great weekend, and again, check out our special. All right, guys, have a great weekend and see you on Monday.